Hey everyone, good evening. It's Scott at Scott Trades on X with StockMarketMentor.com and your chart of the day. I want to take a look at the SPDR S&P 500 ETF Trust. This is SPY. Now, I haven't been involved in the market for the last couple of days, haven't been doing much trading at all. And that's because I have a rule that has saved me from participating in a lot of downside volatility just by watching some of the major indexes. And so that rule that I have is watching my guardrails. On the chart here, you can see I have the orange line, blue line, red line, and black line. This is the 8-day exponential, 21-day exponential, and 50-day simple moving average. Now, these have been great guardrails to really keep me on the right side of risk because typically if we are above the blue line and trending up, we're in a really strong market. When we're holding above the 8-day, a lot of times we're in an accelerated strong market. But when we're below the 50-day moving average, that is usually a sign that something's not right with the market, or at least we're getting a near-term trend change. And so I would definitely recommend, if you're struggling in this market right now, just to use the rule to only be long stocks and looking for long entries when the S&P 500 via SPY is above the 50-day moving average. That typically means that the near-term intermediate trend is intact and you want to be long risk assets. When we are below the 50-day moving average, things can get hairy and you typically don't want to be involved in that kind of market. Now, I can use that pretty much anywhere and keep myself safe. So on the way down, a lot of times a close under the 50-day moving average means, we might get a bounce, but it also means a lot of volatility that I might not want to be involved in. On the upside, waiting for the market to get above the 50-day moving average is also a great signal. As you can see that here in April, where the market started to trend up finally once it got above the 50-day moving average. That's where the real uptrend started. Now, you may look at this and go, well, yeah, but you didn't catch the bottom here and you missed out on that. I actually don't care about that. If I'm looking to follow a trend here on SPY, I'm fine waiting for confirmation of a move above the 50-day moving average just so that I have a line in the sand where I can define my risk. And so I definitely recommend being in cash or heavily on the sidelines when the market is under the 50-day moving average, and being back involved in stocks when the market is above the 50-day moving average. So if you just use that one rule, I think it's going to change the game for you in terms of your trading because it's going to put the trend in your favor. So that's just one thing that helps me, and I hope it helps you. For more tips, strategies, and trading ideas, definitely check out StockMarketMentor.com. I hope to see you there.